In this video, I'm going to talk about what it's like to trade penny stock. Penny stocks are very speculative type of companies. Stocks often tend to fail, and these are very risky. So, in order to trade penny stock, you have to have some sort of strategy. You have to have experience with trading penny stock. It will not going to happen within like 1 month or 2 months of trading. To be good at understanding about the penny stock, how it works, you need to see a lot of price action. Usually, right after the market open, 9:30 a.m. Eastern time. If you see, some stocks, the penny stocks category. Now, what are the penny stocks? Penny stocks are basically the companies whose shares are trading under $5 a share. Some people say $0 to $20 a share. Some people say $0 to $15 a share. There is no such, I mean, uh, exact, I mean, definition of what is called in penny stock, because in the internet I've searched what is a penny stock. There are lots of things that come, like many people say $5 to $15. Many people say $0 to $15. Some people say $0 to $5, so it's very confusing. Just to keep on mind, if you see, the while trading the penny stock, you will see most stocks which are under $5 a share. These stocks often tend to uh, i mean rise very quickly in terms of value. The volatility is very amazing. So uh, for you, you should consider $0 to $15. The companies that are traded under $15 a share, that's a penny stock. Now, in order to do penny stocks, you have to use some good screener. What is a screener? Screeners are basically uh, the softwares that scan all the stocks, the ticker symbols, and it actually tells you, during that particular day, which stocks have went up like 50%, 30%, 20%, 100%, 150%, 200%. Sometimes it reached to 300% in a single day. Sometimes it begins with the pre-market. Right after the pre-market, when a big news comes, the company announced some big news. Maybe they have done some merger and acquisition. Maybe they have been approved by FDA for their drug approval. Or maybe some big companies uh, have done deal with a very small companies, penny stock, and for that reason the stock price is going up. Sometimes, with that type of good news, the stock price tend to go up. There are many types of good news that comes along. The most important thing in the penny stock is the price action. When I see in the morning, especially in the pre-market. Now, what is pre-market? Because I'm saying like pre-market, but you probably, some people, if you are new trader, you probably not understand about what is a pre-market. Pre-market basically is the time hour. I'm saying everything on the Eastern time based, like New York time based Eastern. So any time that is like before the market open, that is from 4 a.m. till 9:30, it's considered as pre-market trading hour. So if you want to trade in the pre-market, like a lot of time what happens is stock price with good news, the price seem to go up on the pre-market. Then it goes up, then when the market opens at 9:30 a.m., it also sometimes go up till, whole day, sometimes till 11 a.m., sometimes from 9:30 to 9:45 a.m. Then it crashes, then again it bounces back. So the price action basically, you can participate on the trading basically also in the pre-market. All you have to do is select, while you trade, select extension hour according to whatever your uh, broker you are using. TD Ameritrade and interactive brokers, which allow you to trade from 4 a.m. in the morning, and some from 4 a.m. you can trade with 3D Ameritrade and interactive broker. You can take participate on the pre-market, and some brokers don't allow you. I mean, to trade on the pre-market from 4 a.m. They allow you like Charles Schwab, for example, E-Trade, Fidelity Investment. So these are they allow pre-market trading from 7 a.m. in the morning till 9:25 a.m. I mean, E-Trade gives you from 7 a.m. to 9:30. So it depends on the brokers. I mean, if you want to trade from the in the pre-market right from the beginning of like 4 a.m. till 9:30 a.m. and also the whole day, you need to use. I mean, those brokers which allow you to trade during that hour. Pre-market trading is always like very risky. Like there are often less volatility, less traders are participating on the pre-market. So if you own some big position and if you trade big, like it will be hard for you to get out from that trade because less trader are participating on the pre-market. However, for the small account, which is very good, like in the pre-market trading you can get in and out. Also, I mean, always concentrate on the volume. A volume basically tells you the number of people that are, the amount of share that has been traded on that day. So always look for volume. Volume is very important. You should not take part in illiquid type of stocks, because illiquid stocks, even if the price goes up, when there are no buyers, I mean, when you are willing to sell the stocks, you cannot easily get out because there are no buyers willing to buy at that price. So always volume is the most important thing. I do not take participate on the stocks which are traded under 1 million 1 million uh, volume, because for me, I mean, it's very hard for me to get out. It depends on the time zone. Like if I'm trading on the pre-market, 500,000 or 1 million volume is very good. But if I'm trading on the regular hour, that is regular hour means 9:30 till 4 a.m., I am like, I'm not trading any stocks which are traded at least for 2 million volume per share. I mean, 2 million volume during that, time time of that day. So volume is always very important. So just now I can begin speaking like what it seems like penny stock, because I have explained what is pre-market, what is regular hour, and what is after hour. After hour basically means 4 a 4 after 4 p.m. till 8 p.m. Eastern time. I am saying every time zone based on New York time base, like New York, according to New York time zone. So it's Eastern time. So that's the after hour. Again, quick thought. What is pre-market? Pre-market is basically starts from 4 a.m. till 9:30 a.m. Regular hour, that is 9:30 a.m. till 4 p.m. After hour, 4 p.m. till 8 p.m. So depending on the like hour basis, you can configure according to when you give buy or sell command. If you're selling on the pre-market or after hour trading, all you have to do is select from that particular broker extension hour. You select ext. Some people are fully, some broker fully mentioned like extended hour trading, so select that if you're trading on the pre-market or after hour. And if you're on the trading on the regular hour, just that's day. I mean, it's very common, everybody knows that. So uh, that's kind of, I mean, the thing with the pre-market after hour basics. Now let's get back to what it seems like penny stock trading. I mean, like like I said, like penny stocks are very like speculative, they are very risky. uh, you have to get in and get out very quickly out of the trade. Otherwise, if you when the price seems to go up, right, you if you ride the momentum on the way up, you can take some quick profit, 15%, 20% during that ride up of the momentum the stock price is going up. But if you get caught like buying the stock at a very high price, uh, then right after you bought, maybe it spikes a little and then begin to crash. If you don't then exit out of your position, I mean, you may lose big. Sometimes the stock moves up to like 100%, 140% in a day. So if you bought at the top level, like at the top, if you bid the price, and when the price starts crashing, if you can't, if you don't exit, and if you like hold the stock for the hope, like to making more profit, you become more greedy, you don't manage your risk. That times, I mean, when the stock price, I mean, crashes from like from 140 or 150%, it will crash big. And sometimes it then directly, I mean, falls 70%. Then the throughout the whole day, it may be sometimes bounce. Some people like deep buying from after a big crash, then it bounces a little, then it again also begin to crash. So I mean, it's very risky. If you are inexperienced about penny